Let's focus on the next management, Angel One. We have with us Mr. Dinesh Thakkar, the Chairman and Managing Director of the company. Hi, Mr. Thakkar, good morning and thanks a lot for joining in. Well, you've mentioned in your con call that the impact on the top line, because, for a raft of reasons, it's going to be around 18 to 20%. That's higher than the 13-14% you guided for earlier. You've also taken some price increases earlier to mitigate some part of their impact from true to label charges. But it was not enough, clearly, right? So if such an impact continues, what is the quantum of price hikes you may have to take from here on, sir?
See, there are two things on previous guidance. After that, we were of the view that maybe a monthly expiry, the way it was getting expired on different days of week, will continue. But when clarification came that there will be only two expiry, one expiry per exchange, that created an additional impact of around 3 to 4%. And on price hike, you're able to hear me?
Yes, sir. Go ahead. On price hike, how much are you going to take?
Yeah. On price hike, what we took, there is a gap of around, say, like 2 to 3% maximum on true to label. But there can be more because of market condition also. If you look at this quarter, all kind of an worst thing which can really dampen sentiment and reduce volume had happened, which includes FII selling, US election, our government spending being low, economic growth being low. So if I remove all that noises, I think we would be fairly in the range of all-inclusive impact of regulatory changes to the tune of 18 to 20% impact on our top line. But now over here, what is important is that kind of like growth that we are seeing in customer base, that is not slowing down. So our customer base is growing at the rate of 40-45%. So this impact, what we are seeing, it is just a one-time temporary impact. But if I factor in growth that is going on in this industry, especially for digital players, that is in the tune of 40-45%. So it is a matter of maybe 2-3 quarters that we would be able to offset this kind of a hit. So I don't see any impact. Yeah.
Sir, but that's exactly the question, right? That you've quantified the revenue impact was about 18 odd percent. Now, the question is how much of a price hike, I don't know if you've already taken some measures, how much of a further price hike will you have to take to mitigate the revenue and the profitability impact of these true to label norms and the other changes?
Surabhi, what I was saying is that, okay, in a digital kind of like industry, there's a fixed cost. And if we get additional customer on the same fixed cost, and if we are able to improve our margin based on increment in customer base, there is no need for a price increase. So we will wait for 1 or 2 quarters before we decide on any price hike if it is needed. But my gut feeling is that looking at the growth that we are seeing in this industry and looking at kind of like participation from customer, we would be able to recover our cost and maintain this margin of OPM of 50%. So we will take 1 or 2 quarters to decide whether further price hike is needed or not.
Got it. Dinesh, hi, good morning. Prashant here, and good to see you here on the channel. We've spoken about this many times in the past, actually over the last few months now. So some are highlighting that industry-wide option volumes have fallen sharply, right? Now, within exchanges, there is market, some are fall is not so sharp and others fall is slightly sharper. That's a different conversation. You, of course, work with everybody. Could you tell us where do you expect this to settle? Because option volumes were 80% out there of overall volumes. And so just some sense because we've seen activity at least for 10-12 days this year and last year as well.
So Prashant, what happens when a customer is entering in the market? He would look out for few areas where he can trade, he can invest. So option being bit kind of like easy to enter, they were using option as a vehicle to trade and invest. But if you look at what happens is that if at all there is a big change in kind of like market offering, they try to focus their attention to other kind of like areas like cash delivery or maybe commodity or some other area. So it is not that customer will go away from market. They will come, if they are not trading in option, they will find out some other kind of an alternative where they will continue to trade. But if you look at last 8-10 years, maybe they are on the sidelines because people who were doing one kind of like contract, they have to check that what other alternative they have in the market. My experience, past experience of last 20 or 30 years, starting from way BSE had Badla, they banned, then automated lending system in NSE, and then future kind of a trading. Then again, focus went to cash market. When peak margin came, they focused again back to option. So they will find out some alternative to trade. I'm not seeing any drop in terms of their activity in the market. Wallet share of customer that is dedicated towards trading and investment continues to be same.
Okay, all right. Now, for Angel specifically, you invited some senior people and in some of the new businesses you're building out, wealth, for example, Dinesh. Could you tell us what should investors expect? By when do you start to see, these businesses starting to scale up, size up, and any numbers in terms of roadmap will help here?
Yeah, see, wealth business, we just recently got licenses, PMS and all other things, licenses which are needed to start distribution and do our kind of advisory service and portfolio management services. So this quarter, we would disclose numbers on what we have achieved. I'm talking about our current quarter, because we have just started activity just few weeks back. So we are very hopeful that kind of like opportunity which is there in the market, where middle belly, I would say, emerging HNI haven't got a kind of same kind of service what is available to HNI and ultra HNI. So we would like to use technology so that we are able to create more efficiency in terms of serving customer who have a kind of ticket size of 1 crore to 10 crore. So apart from being present in ultra HNI and HNI, we would like to use technology to create efficiency and create better products offering on our app. So it is too early to say right now, but we would like to aim for a leadership position in this area.
All right, Mr. Thakkar, you briefly mentioned about OPM going to 50%, if I heard that correctly. So margins get back to 50% in the next 2 to 3 quarters. Is that correct?
Yes, that is correct. So that is what I mean, that we have that levers. So if you are able to get this kind of an OPM, there is no need for price hike and all that.
So you're considering going to that 50% even without a price hike, at least as of now. That is your plan, or you're factoring in a price hike to get to the 50%?
No. Without price hike, I'm confident we can get to 50%.
Got that. Next 2 to 3 quarters, we'll have to hold you to that one. What about market share? For the month of December for equity, it declined for the second straight month. F&O as well, it slipped a little bit. How is this expected to move?
No, our market share, overall equity market share is improving. Plus or minus a bit, that is, I think, can depend on what kind of participation we are seeing in the market. But overall, if you see our market share across all sectors like equity, commodity,
it slipped a little bit, sir. Mr. Thakkar, as per the data that we have in equity, it slipped by 30 basis points, but a small slip out there. You're saying you're holding on to market.
30 basis point,
is par for the course.
3-4 quarter, it is continuously growing. Few kind of a month or a day, you will see a blip. Maybe participation from HNI increases, so our market share may appear to be lower, but because retail is not participating, people who are doing one contract, they are not participating right now. But if I look at acquisition market share, active market share on NSE, so we are seeing it is continuously rising.
So, Mr. Thakkar, just to sum it up, and I just want to ensure that we have the right understanding, what you're saying is that you may not have to take price hikes at all, and your margins will go back to 50% even without a price hike. And all of this hinges on the fact that the sheer number of people coming on the platform, the number of customers will increase, and that will offset everything, even the volume decline, because the volumes have dipped as much as 70% in the F&O segment, right? Because of the weekly expiries being reduced. So number of customers will make up for all of it?
You are right. When volume drops, you are just looking at F&O segment, but our revenue comes from cash segment, commodity segment. So what happens, as I said, that customer will switch to some other segment. We are seeing those kind of trend emerging. Not that customer will totally get out of the market. And in digital businesses, there is a fixed cost. So additional customer is straight away going to contribute to bottom line, which will help us to come back to OPM of 50% without tweaking prices for any services.
Dinesh, we'll leave it there. Thank you very much. Good conversation as always. Appreciate your time here on CNBC TV 18, and good luck to you and the Angel team.